What it is, back once again with them Hollywood trades. Okay, we are on gold right now. It's getting kind of heavy. I said I was going to do more updates this week. The last position that I scouted and was able to actually take was this low here. I got in actually on this candle. Almost got stopped out because my stop was somewhere down here below this fair value gap. And I was thinking that I was going to be cooked here, but it just did a multiple stop hunt, what I call institutional order pairing type of deal. And somebody with a large position needed this stop hunt right here to be a little more, because it did go below this stop hunt level here, but then they needed a little bit more to pair the rest of their orders. That's how I see it anyway. And we were able to take profit right here at this fair value gap low, as they would call it. But that ended up also being a continuation type of deal, because this actually would have been the continuation level to continue another lower low from this stretch. You go up and then you come down and then break this low again. However, I didn't foresee that happening here, and just for reasons of just this dealing range being a lot more target worthy to target more of this dealing range. There was no block, right? Like a mitigation block. The nearest mitigation block on the hourly is actually right here, and so with that being the case, of course, we did we approached a mitigation here, but we did not get that. So in my eyes, I'm thinking when I see this, it did the 50%. So if you go to the 4, I actually got rid of my Fibonacci because it's pointless at this point, because we hit the golden level or the optimal trade entry right here, which was the fib measurement. If you measure this high to this low, this was the 50% and this was the 60 something percent inside of this fair value gap. So I'm no longer really interested in that entry. It did turn this into a bearish order block. However, the fair value gap right here and this order block actually caught price pretty well. And as you guys know, BPR entry, this is a balanced price range, and that creates, for me, if it doesn't close beyond this, hits the lowest block and then proceeds to go upwards from there. I'm thinking that we are going to, and this is the nearest bearish order block in this drop right here, what they would call drop base drop. So this base right here, or order block, would be the nearest place, and this right here, this whole area up here, is the nearest place where I would be trying to target. And we target highs, of course, on the way up. So if we get this high, there is a chance that it will balance this and then fall back, but I would like to see it close over this and then target this and this. At least this is the two liquidity points inside of this order block range here. So from here to here, there are only 2 take profit liquidity levels. And so after these 2 take profit, or one of these, we could potentially definitely get a fall all the way back down to sweep these 2 lows is what I would be looking for if we do get a fall. And then I would want to see what happens here, because if it continues to displace below here, then you got that, and then you got that, and then right all the rest of this unfilled gap, and then testing of this low never happening. This is the only low really that exists within the body boundary of this order block. So that's the type of thought process I'm looking at. But that's pretty much it. I just wanted to give an update intra-week. As we go into midweek, we do have the remaining imbalance here. So I'll actually do that just to give me eyes on the remaining imbalance there. There's no more imbalance. The rest of this range up, there's just order block type of potential there. So that's pretty much it. Didn't really have too much more to say. The only reason I actually thought about doing this is because they won't let me post in the mines right now. I guess I posted too many mines. I was trying to help the gang out a little bit more than I guess I should have, and was kind of people are trying to sell like short up in here, which this is a shorting, this is a fresh supply zone. However, with this fair value gap, with a fair value gap, you expect any of the orders that did lie pending in here or any of the exchange pending in here, you would want to always think that it's going to take us right back to the highs, at least this high, right? Because that's like a CRT motion. So the candle range theory traders would be buying below here or looking for the dip below here and then buying as we start passing these candle levels here and here. And then you target here and potentially here. And then, of course, any of the imbalance traders would try to hold for this potential correction of this imbalance here. But pretty much that. I don't really have too much more to say here because we covered a lot in the actual whole video from, what was it, Monday. So that's pretty much it. I did code this as a bearish level, but with 2 hours left to go, of course, we still, with 2 hours and 43 minutes left to go, we could still come back below this level, but I don't think so. I just did that to see how it would respond to that. And it's looking like this was a no-go. It displaced below this low, but it immediately covered back up the range here. So there was no imbalance displacement because it could have easily just kind of kept going and then closed and then never threw a wick here and gave us an imbalance displacement. And then this high, if it would have been here, right, instead of all the way up there, this high would have acted as a stop hunt level. You go above it and then you can kind of get an exchange to keep going lower. But because that didn't happen, this actually became a target. So when you see that there's a displacement below the stop hunt level, which would have been here, there was a displacement below this level. It covered it. It covered it. So you're not even thinking bearish too much anymore. And it didn't displace below this low as well. So you're more so going to be airing towards CRT long because this is a stretch, impulse, breaking BOS impulse, retrace, BOS impulse, right? Right. So that's just what you would think. Like, right, low, higher, high, higher, low, higher, highs. That's just what you would think right here. Even though this order block did get created, this was an order block for sure. It absorbed the fair value gap and then printed a bearish close. However, a bearish close into a bullish fair value gap is like a nullification, basically. Unless it closes directly through this, then there's a new bearish fair value gap that you could kind of say, you get what I mean? So it's kind of like a jigsaw puzzle in a way where you gotta kind of know. And there are people shorting here, so I was just trying to save the gang. You'll see a lot of people talking about go short now, stack more shorts. It's like you stack more shorts, and then this thing goes all the way up to here, at least, right? It goes up to one of these highs. You're done for if you hold that, first of all, and then your stop is going to be here or here, and then that's already. I mean, you're talking about 100 pip stops at that point. They say low risk shorting, but I mean, what is a low risk short? When you expect a fair value gap to send you back to the high, that's what you should expect. There's an order block here with a fair value gap. When you hit it, mitigate it, correct it, and then you go back to the trending BOS, which is here, and the rest of the imbalance. So there's I'll see y'all next time. Make sure you share this with someone and subscribe.